Well, the Motilal Oswal Annual Conference is kicking off today. It is the 19th Annual Global Investor Conference, and as always, the conference promises to bring together top CEOs, a diverse range of eminent speakers, experts over the next few days here in Mumbai. Well, according to Motilal, we're talking 200 plus companies with 1,000 plus investors from across the globe. Raamdeo Agrawal is the driving force behind the research endeavors at Motilal Oswal Financial Services. He's joining us. He's chairman, co-founder at the company. Mr. Agrawal, great to have you with us here. Thank you very much for your time. Appreciate it. I can see the sort of activity starting up behind you, so it's always a very vibrant event, and thank you once again for joining us from the sidelines of it. What are you most excited about, Raamdeo, about from this conference? What are you hoping to learn from all the companies who are going to be there and all the investors who are going to be there? Because it's a two-way process, right? I mean, they'd want to hear from you, and you'll hear from them. What's top of mind for you, really, this morning and over the next couple of days?
Yeah. Good morning, Prashant. I think the mood is set. We are at all-time high, and after a long time, there will be a full participation, because last year was the first year post-COVID. Still, participation a little muted. But this year, I think investors have come in full force, and people are coming from, apart from domestic ones, we are getting the delegates from newer countries like Korea, Taiwan, Japan, apart from usual Hong Kong, Singapore, US, London, those guys, they have been coming in the past, but now we are seeing slew of new countries joining in. So we'll get opportunity to interact with all of them. And even the companies lineup is about 220, 225 companies. So I think it's a big mela for next 3 days. And I'm trying to catch few trends, what's happening in terms of what's happening in the economy on the ground, because all the operators are there. Second is that what is the thinking of FIs in terms of their confidence in India, how do they think, and their allocation, would they like to be still conservative, or would they be, this is 23, 24 will be the year of again coming back into Indian market. So those are the discussions which are going to come, and it will be more in listening mode than too much of asking.
Raamdeo, hi, good morning. This is Sonia here, and all the best for the conference. It's very interesting, right, to hear that so many FIIs from new geographies have registered this time around. And if you look at the data that has come into the Indian markets in terms of FII flows as well, FPI flows rather, it's been the highest in India compared to the rest of Asia. So what is the sense that you're getting from the interactions you've had already? Is the interest still as high as what it was in the last 6-8 months? Or is there now a little bit of caution that's kicking in?
Yeah. So, Sonia, very good morning. I think it is too early. I've just come in here to the venue, and through the day, and till late night, and tomorrow and day after, I think 2-3 days I'll be interacting with all of them, and during the conversation only we can figure out what kind of interest they have. But right now, I would say there is an optimism, and the number of, I'm going by the fact that the kind of a request which is there for the participation and the number of meetings, I think we can do about say 7,000-8,000 meetings effectively, but the request is for 25,000 to 30,000 meetings. So that tells me that investor interest is very high. This is of course mainly domestic demands, but even the foreign demands for the meetings are quite high.
Hi, good morning, Mr. Agrawal. Nigel on this side. A lot of foreign interest as well, but a lot of big HNIs from all across the country as well, have come for this conference. And a lot of them we don't get to meet, but because of the conference, we're going to be catching up with some of them post the conference. But tell us about the interest levels, particularly the mid and the small cap space, because that's been an outperforming index for the last 5 to around 6 months. Is there still big interest out there? And what's your view? Have it run a little bit ahead of itself?
Yeah, so I think it is to do with the structure of the market. Still the institutional activity, particularly from the FI side, for last a month or so is a little subdued. But we are passing through one of the, in fact, I'm presenting on that, India's retail equity revolution. It's nothing less than revolution in what has happened post-COVID. and what is happening and what could happen in the next 3-4 years. So we are trying to compile this thing. So the impact of retail equity revolution, or demat accounts opening, participation going from 30-40 million to 120-130 million, and trying to become more like 200 million in the years ahead. I would think that interest level will actually become bigger and bigger, and these are counters where with limited floating stock but a lot of buying power. So that tends to distort at some point of time, but eventually the corporate earnings underlying will decide the levels where it will settle.
No, so if I were to, Raamdeo, if I were to ask you right now, right, for the small cap space here has been the best performing, in a way, asset class, not just here in India, but maybe around the world. Maybe this year or whatever time period you want to use since the rally began. So where are we? I mean, is that space looking still quite okay to you? You have a sense of history. You've seen this play out many times before. What's your sense? Is it time to take the foot off the pedal a little bit, or fundamentals and earnings there are looking healthy enough to kind of sustain this up move?
Prashant, our biggest problem is that we have seen 40 years of the market. We have seen such low levels of the market. The mid cap, small cap was so neglected. Single digit P was, they were thankful. But today is just the different kind of thing. So many times I'm not able to appreciate the valuations granted to small or mid-sized companies. Of course, they are growing very rapidly. So, that's the kind of thing. But as I said, there is a structural boom from the retail side. And retail is not happy buying HDFC Bank and ICICI Bank. They are happy playing out on more on this mid and small size companies where they have access to the information, and they can also size up their bets. So I would think that excitement will continue. Of course, it may shift from one sector to other sector, one company to other company, because no company can keep growing to the sky. But I think you'll find a lot of excitement in the small and mid caps, and the names of the companies will keep changing. Today it is defense, tomorrow it could be NBFC, day after it could be some other theme. So whatever themes comes, but I think that sector will remain quite exciting.
No, you started by answering that question by citing retail flows. Now, and that is also a big structural driver now, which was not there even 3, 4, 5 years ago. So that.
Yeah.
But how much of the boom that we're seeing in that part of the market is because of this, and how much of it is driven by? It's a mix, obviously, but I'm just saying, is it retail money chasing some of these stocks up? Because you got to square that off against earnings growth and valuations, etc. So just trying to get a sense from you, Raamdeo.
Yeah, so Prashant, what has happened is that in the past, till about, say, January 20, so this entire phenomenon is just about 3 years old. So before that, the retail participation was extremely muted. Let me give you some number. That number of demat accounts opening every month was about 3 to 4 lakhs, and at best it will go to 5 lakhs. The moment the digital onboarding started, it shot up to 30 to 40 lakhs. Now the average between 20 and 23 is more like 2.5-3 million per month, and in between, when the market was correcting, it dipped, and now again it has come back to 2.5-3 million. So this is very relentless. There is a lot of juice in the number of participants which are going to come in. You can imagine from 40 million to 130 million, and that going to 250 million. So at least the boom in participants is on. Now what it will do? See the 2-3 forces coming together. One, increasing number of participants. Second, the increasing disposable income of all these guys. So and third is the increasing corporate earnings. So when all three come together, and if you look at from the FI side, FI in last 30 years have sold only five times, and last time was the last year. So I would think probabilistically they would not be net seller in a meaningful way for next 2-3 years. So now you have foreigners buying, retail buying, corporate earnings very good. I think you can't get a better picture than this.
Okay, we'll end that on a positive note. Raamdeo, all the best for the conference, and thanks a lot for joining us to give us a primer on what to expect from the Motilal Oswal conference. Well, let's move